Hello everyone. I hope all is well. तो ये थोड़ा इंग्लिश ऑडियंस के लिए बना रहा है एक्चुअली मतलब मैं एक ग्रुप का पार्ट हूँ जहाँ पे देयर आर डिफरेंट पीपल है ना अलग अलग लोग हैं तो थोड़ा मैनेज कर लेना ऑलराइट so I will talk about gold which I've been studying of late and there are certain things which I have noticed regarding gold. First of all, we need to just understand that gold goes bullish when things are not good in the world, right? तो जब war होती है या currencies पे stress आता है when people countries are buying back gold, to go towards reserve currency away from dollar, right? Yet then gold rises and normally what happens in gold is usually in a range, right? For like years together. Here, if you see, this is 2013 to 2019, right? In a range, goes up. In a range, goes up, right? So gold, but when it goes, it just goes, right? Every every week is bullish. So that is how gold happens, and in relation to dollar. mm Well, when you're in a consolidation, it doesn't matter, right? But in general, it should be opposite. But that doesn't happen. These are very different markets we are seeing right now, right? Because of the geopolitical things and about dollar and where things stand as dollar's reserve currency status and all that stuff. Right? So if you're interested in controversy, then basically um, countries are trying to move away, and even potentially US to clear its massive debt. It's moving potentially a lower dollar is better to wean off debt and so on and so forth. So that's basically the macroeconomic situation. And in basic terms, when bad things happen in the world, gold goes up. Right? So I I prefer to be on the short side, right? At least some moral conscious. But what happens in gold is it works with one can say basic support resistant trend line really well, and you will see it happen. So I think a lot of retail traders actually potentially may be doing better in gold compared to let's say Nasdaq or something like that. Right? So and gold likes to retest levels a lot. So the advantage is you don't have to FOMO into an entry. You can really set limit orders. You don't have to execute market orders. You can just aram se do it because at those turning points, look at this, right? So at those turning points, it revisits a lot of times at the turning points, right? So and usually it will be like a sweep of a higher time frame, and then it goes, and when it goes, then it really goes, right? So that's how it works. If you, I mean, think about it from a retail perspective. matlab, if you've got your, I think to what basic support and resistance will look like, right? So here, then you have this particular zone, right? So like this, and then as we go lower in the time frame, you can get your zones. This magnetic thing is a little bit of a thing, but you get your zones and it works really well. All the trend line, everything, right? So channels, it works really well, uh, well and good. Okay. So now I know we trade ICT and everything. That's fine. I think from a entry perspective, if we look at like one model and we should ideally stick to our own model and one model, then as far as ICT model goes, I'll show you. like how that can work, and then SMC model, and I'll show you how SMC will work, right? And generally, what happens if you are familiar, even with different models, when you're following one model for some time and it's working for you, you don't see other things, right? So when I'm trading SMC, I don't even see in relation to ITC, ICT, what what's happening there, right? So that's kind of how at least it works for me. But if you see, like wicks are really important part in gold, right? So wicks are something to kind of pay a little bit of attention to, and how do you actually deal with it. With the experience, I think you will notice some of these things. But um, for quite a few traders, whatever style you're trading, I think if you are expert in gold, then you're really paying attention to wicks, right? That is that is like an element or a factor in gold that works out. So anyway, let's just go a little bit top down into this market, and I've given you the background context, some bit of fundamental on how gold operates. So if we just look at it, gold pumped hard, okay, and then from here, I'm saying that this is what I would say the dealing range we are in, right? So after, let's say, this break of structure, we had this particular um, inducement taken out, right? Break, then this inducement taken out, so this low got confirmed, right? So this is our low, and I would say that in this particular leg, I would say this is a high. Right? So that's kind of how I'm looking at it. I'm not looking at it from this perspective, right? Why? Because see, in the daily, there is no inducement in this leg, right, which has been taken out. That means this particular low is not confirmed, right? That's SMC, and the market structure is very important. Whatever you trade, and if you're trading ICT concepts and you don't understand market structure, then basically you're not going to milk that particular strategy. Okay, market structure you should learn, and SMC way of understanding market structure is really good. Okay. Anyway, so moving on, this is our range. We came down to this particular order flow, right? Then this is internal, by the way. This now we are in internal, right? So internal we come down, we go below 50%, right? And then let's say this is the consecutive candle order block. We go back, and now we are basically in this. Can this potentially become the range, right, where gold gets stuck? Okay, it's possible. From history, you will see that gold can be stuck for a very, very long time. Okay, so then we just what we have to do is basically just zoom in and think that okay, now we work within this particular context and start from like basically here we came down. Okay, and this is all internal now. So from here, then we go up, we do a sweep, a sign of some form of reversal, come down, we sweep here, and now we are kind of, you'll find that we are in, uh, and if I look at the Goldbach dealing range, this, this particular range, this whole range is what we are actually in, right? It's the Goldbach dealing range. We are basically going from extension to extension, right? Extension, and now we are kind of taking support at equilibrium. But where will we go? And this is what happened. Like, and I'll show you some other things. I'll just talk about power of three. That is again fundamental, whatever name we want to call it. Every candle will have, open, high, low, close, and otherwise, right? Open, sorry, open, low, high, close, open, high, low, close. That's the power of three, right? So basically, uh, that is also an important factor to understand. And when we are looking at it from a weekly perspective, क्योंकि as we are going towards intraday or even forex में swing, we are not really looking beyond the week as such. So I think just up to that point is interesting. Anything higher doesn't really matter. As you can see, especially with gold, you can be in a range for a period of time. Okay. So now, um, so let's just basically, and I would say that daily ho gaya, the daily work is done from all that perspective, and now 4 hour, I would say, the for me the highest time frame, like highest for something a little bit more longish term is 4 hour. Why? Because then 15 minute connects with four, and for intraday 15 and 1 and 2 minute is fine, right? So that's the framework that I'm using, and now I'm interested basically in the 4 hour and kind of go from this is the internal structure, and in the internal structure, after we basically you know close above this, not it's kind of not very nice what it has done over here, and I think it's the um, market open which purged this particular high at 5, right? So this I got purged, and then we can kind of deal it from here, right? So here one can say that okay, now short term it is potentially uh, lower, and we are inside this dealing range. So how, it won't be fair to call this like a higher high, right? And therefore we can say that we are in that context in a bit of a consolidation. So not really going after the extreme right now, but in the short term. And now this is what is important, right? So the power of three part, where I was saying that weekly profile becomes very important, because uh, and I'll just go in this whole leg and identify for you typical days where highs and lows will form, right? And that is extremely important. It's important when I am trading on particular days or looking at like a swing for a day or two in forex. Then and this will be true for any market, but let's just see over here. So Sunday, Monday, Tuesday is typically the higher low of the week, and Thursday is typically the higher low of the week on the other side. So depending on what is happening, you can pretty much form a bias by probably by Tuesday or Wednesday. You can get that clearly in your thing, and then you can take your bets based on where the market structure is, even on a, let's say, on a Tuesday, right? Or potentially even on a Monday. So let's just see. So here, this was Sunday open. It went up. Tuesday high, okay, and Friday. So basically, high and low was done on a Wednesday, right? So when that happens, when it is not a Thursday, it is Wednesday, then you can potentially see this kind of a what do you say? Uh, this becomes problematic. The Thursday, Friday after that, right? Friday will now wants to go inside the range, ideally not close. So anyhow, that is, so we got the Tuesday high, right? So Sunday wouldn't be the low. So if I was trading and I was let's say on a on a Tuesday, then it's here. I can already see that will probably go lower in the week, right? And then looking at the market structure, you know that okay, there is some uh, basically inducement over here. There is no other inducement. So this becomes a nice little target right, wherever you decide to get in. And then we go further. This was Friday. Here, a Sunday. Okay, we are inside. Here it is Monday. So Monday could be the higher low, right? So again, depending on the structure where you are. Um, so this is Monday. and then we come Thursday, right? Thursday can form the low in this case. So if you are like, let's say, bearish, then entering over here in this area is going to be, I think, fruitful, right? So after we have taken inducement, and I'm looking at 4 hour, like I told you, higher time frame 4 hour, then where is my order flow? This is my order flow, and this is the refined sort of thing, right? So this is basically the order block area as well. Okay. But something like this, right? And then from here you can expect like some reversal because you're on Thursday and you have hit a POI after inducement and a bullish trend, and then you can expect this high to be taken next, right? But obviously you won't hold till there. Okay. So anyhow, we got Thursday low, then Sunday opened here, then Tuesday high, right? We can expect high, but again we are very close to this, so you can expect some retracement. Actually, Sunday is inside, so I mean, why not just think that okay, it has traded something, it has traded this particular order block, they value by gap, whatever, however you want to think about it. But next, where do we come? We come to Thursday, and this closes inside. So actually, this became like an inside thing. Isn't it? Sunday to Tuesday high, and then we where did we get the low? We didn't get like so. This became like an inside thing, right? So this is where we got uh, something not so clean. And if you will notice, we are at this 25% level uh, of this particular thing, right? So of this range, dealing range that we are in. So 25 is going to become like it will sort of start to matter, isn't it? Because price can actually reverse somewhere and go up, but if it's unable to, then it's kind of going for this 1.5, right? And then every time it is in this 25, you will see kind of uh, some kind of consolidations sort of happening here as well, right? So anyway, these are just different things to understand from a context perspective. But let's continue. So we got here then we got Sunday, we got Monday, and again we have to work with the context. So it's coming here, um, and and until I think so. Now, from a market structure perspective, we have to also think right. And I guess if you're looking at this not going up, what I was saying is that we should be interested in this point 0.5, and in point 0.5, if we go from a daily perspective, then we will have this order flow, right? So this big chunk is the order flow. Mm. This is more a decisional order flow, right? If unless we have something, okay, this is probably mitigated, this one. So the only order flow left is this one, right? So this is only the extreme order flow. It's at the 1.5 level. So we come down on Sunday. This is a Monday. We haven't reached this, right? So can Sunday be the high over here? So we come down and then we get the Thursday. Thursday should be the low. So here we can look at trading, right? And then of course you search your lower time frames and deal with it. But you see the 4 hour is what now in this defined dealing range and in this context helping navigate I mean I would call this just bias anyway. So Thursday, then Friday closed inside the range, then Sunday, Monday, this is a low, right? Monday low, and again in this context, where are we coming from? Um, and what's likely to happen? It's likely to kind of push up again back towards this area, right? Because overall Our trend is bullish. We've hit the point 5, and it can go up. This is where it should turn around and ideally go. It will be the expectation. So from here, we are basically interested in some kind of buying till potentially. Is there any unmitigated stuff? I think there is only this from an order flow perspective, because we ideally we should when we should mark this, we should mark this when there is some inducement, thinking okay, what can potentially react and take it down if the trend is potentially at least changing, and this fails, point 0.5 fails and we go lower, then you look at those points as well, right? Anyhow, that is not the topic that I should be talking about right now. So we go Thursday low, Monday we come here, and our objective is somewhere up here, right? So whatever we define, order block, order flow, this high, whatever it is. So Monday could be potentially the low of the week, like Sunday, Monday. And this I'm only saying because it kind of purged, it filled in this particular gap. We are coming from here. This was the shift, right? So let me just draw this out here, right? So we would say that this is a chalk. If we are still thinking we are now going to have that um, what do you say, the next impulsive move and break these highs. This is your chalk. After that, it comes down, comes to the order block, goes up, and this is your inducement, right? This particular. This is now the buying, where buying should happen, right? So if it doesn't happen immediately or it's coming down directly, then you don't have any order flow. You only have this order block and this gap, right? So that's, or you can look at it from this perspective, ICD perspective. This is your order block, went up, broke structure, came down. This traded the order block. Now you have a propulsion block. You traded the propulsion block to go higher, right? Whatever way you look at it. But here is where we are saying that potentially Monday is the low. And then where does it take us? It goes till Wednesday. So yeah, we're looking for Thursday, but Thursday is here. Finally, Friday has created. So when, okay, this is the other thing now. Again, going back to if TGIF is not happening, this is TGIF not happening, and you can expect that when Thursday is not forming the high, right? Then you can expect uh, it won't happen TGIF, right? So anyway, we go basically from here to here, and we can expect Monday to be an X, not an accumulation ideally. Monday should, but here it kind of may became an accumulation. Generally, you will find if TGF didn't happen, then Monday will also go. Monday won't be an accumulation, but here somehow it is accumulation. Anyhow, so we got the Sunday, and we are expecting basically an X. X is continuation or reversal, right? So now again coming back, Monday, Sunday being potentially the high, and being an X, we have taken out this particular liquidity over here, right? The engineered liquidity, and we've just traded this wick. Is there an unmitigated order flow? No, there is just this order block, right? So yeah, I mean, when we are here, then I would expect an X in the sense that maybe lower, but let me not see that. So anyway, it could be the high of the week, right? So let's see what happens when Monday comes. Oh yeah, Monday did actually move. Okay, no, it just consolidated. Then Tuesday could be high or low, right? So this coming into this could be a potential buy as well. And this, so here is a problem now. We are inside this thing, right? We're inside this thing. You'll have to be a little bit. This can be a little confusing, but let's see if Sunday, Monday was the high, then Wednesday. Okay, so again, in this case, Wednesday became the low. So I said that if it's looking like this, then generally Thursday, Friday would be effed up, right? So that's kind of what has happened over here. Um, in a way, it is kind of like an accumulation, right? So generally, where the market has opened, and here we'll have to use quarterly theory, just to see the two open. Okay, that I will get if I zoom in, but roughly the open would be here. Okay, the open of the week is the open of the second quarter. Somewhere over here is the opening, and the market would kind of close somewhere near it. So that is accumulation. So this accumulation thing happens when we are not following a proper PO3, when Wednesday is forming the low. Okay. Anyhow, that is that. Then Monday. So we opened here Sunday. Monday we went up. Now we traded this particular POI, right? We traded this order block. This order block, by the way, is not the ICT order block. It is SMC order block, which is basically the last candle any color with a fair value gap on the extreme side, right? Or not even extreme. It could be potentially in between also. Right? So we hit that POI, and we could expect some kind of a reaction as well, right? So anyhow, so we got Sunday, Wednesday. Okay, no, here Sunday, here Monday we hit that POI, right? We could expect that. Okay, now we can go lower. This could potentially be the high. Okay, and then we get some kind of a intraday trade right here, and then Tuesday comes around, Thursday. So it doesn't. It goes up, purges this, visits that particular uh, wick or whatever again, and then Thursday could be the. So we got the Sunday low basically, right? We didn't get the Monday thing. Thursday we got this thing again, a bit of a here, Friday, Thursday. This kind of again a little bit of a range thing, right? Happened. Right? So you'll have to kind of trade a little carefully, especially when you're in this 25. Okay, 20. I mean, as a rule, I would just say that going forward, whenever we are somewhere in this area, then planning for extremes can be a little bit tougher. But anyhow, you get this, you may get something over here. Then Sunday, Sunday opens Monday. So again, in the context of where we are, there is a particular gap. This is your order flow, right? So we went up, we broke structure. This is the inducement, we broke again, right? We sweep. Where should be a buying? It should be here because there is no other order flow in this leg, right? So here we are still expecting some moves till this point when we started that thing. So it would be good to kind of stay in the continuation side of it. So we have order flow. This is unmitigated, right? So and we have this particular gap Sunday. So we could say that this could potentially be the low depending on where Monday goes. So Monday comes back again, trades into this. So Sunday could be the low now. Right? By midweek, you should be clear about it. And then we get Thursday, Thursday, yeah. So we can expect Thursday to be the high. Friday, why in this moment? Okay, just ended over here. Okay, yeah. So basically, this is a low, and we can say that Thursday will be the high, but this happened really after market close, right? So London is here. Yeah, I mean, this could be a bit choppy to kind of trade. But again, we got like a Sunday low situation. So this would be a lowest buy right here, somewhere in this area. When we go up, Sunday opens and we take this out, right? So now we can expect this Sunday to be the high very easily after this, right? For at least some retracement in this leg now that if we are going up, we are breaking structure and then what are we looking at? Right? So we are looking at something in which is not mitigated, etc., etc. Anyhow, we come down. So Monday, Tuesday, Thursday. So I would expect that okay, Friday could go up from here, but instead we are back again coming back into this 0.25 kind of a situation. Okay. So this is Sunday again, Monday purchases, and now we can assume that maybe this is where the high will form, uh, right? Because there is a lot of accumulation and orders happening over here, maybe a push to the downside, etc. So then we get Tuesday, we get Thursday, and we don't get that TJR, right? We don't get that TJR. So, and Thursday, Wednesday, Tuesday, we are here. Wednesday, Thursday, we are expecting now a low on Thursday, right? But kind of just stayed inside in this accumulation at that 0.25 particular zone, right? Then Friday, because it expanded, then Monday we can expect basically an X. It won't be an accumulation. So Sunday dropped, and now we've taken this out. There is no other order flow, etc. So good place for potentially again going higher. Right? So we get the Sunday low, and we are expecting a Thursday kind of a high, but it was a Wednesday high. Then basically after that, it'll this will just be here, right? That in that situation, it just accumulates on a Friday typically. So again, we get this is the Sunday comes lower. We are at that 0.25, and now we have kind of swept this. We took this. Now this is where the problem happens, right? We're kind of in the middle. So what do we basically go for? Should we go for buys? Should we sells? And that can be tricky. But it's saying that it is a consolidation area. Maybe when it goes up, it will come back, and it will come back, and it will go up. That's what could happen in consolidation. So, lower time frame still you can go right. 15 minutes you can easily trade some of these things. So anyhow, we come Sunday potentially low. Here we get a bit of a same situation that we saw earlier down here. Right? We had drawn it out. So yeah, this right. So shift, ting, 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 ting. Same thing here. Shift, go up here. Order block, order flow, whatever you want. Okay, go and take this high with a closure. Right. So closure means, and here if you're looking at it, this order flow was mitigated. The only thing left is this particular order block. Right? Which is unmitigated. And this above this, do we have and this one would potentially be the plastic IC. This is SMC, and this is a gap, so we can just take that as a zone. There is an unmitigated order flow right here, which will become important. So we normally just take order flows first. So in this case, I won't really think about this too much, except there is this particular gap. Now we are here. So we got the Sunday low, and Monday we can expect because TGIF did not happen. Monday will expand, and Tuesday will accumulate. Right? So that is generally the thinking. So we are here on Tuesday. Tuesday ended in an accumulation. this was tradable after this point, right, up to here. And from here, we could expect some kind of thing. Then we come to Wednesday, Thursday. So we're expecting high or low, but instead we got screwed up. And then when that happens, then you know what happens to basically Fridays. Right? Then again, we come on Sunday. We are inside this now. We come down. We are on Monday. Monday, we can expect the low, possibly because we have this order flow here, right? So we went up. Now we are, let's say we think that we are changing structure again. We are bullish kind of a leg, let's say. And we are looking at this order flow over here. Then you come to the order flow on Monday, and basically now you're expecting it to go up. If it fails, then it's coming for something else, whatever. But Monday, low, and this is kind of PDF, right? It stayed within the range, so Monday don't really expect too much of an expansion, but somehow we did get some push. Uh, and Monday created this as well. So it has taken out Sunday, and Monday did this. So now Monday had a low in London, and at market close, Monday kind of made this particular high, and then we are on Tuesday, then we come down. So Tuesday, I would expect the low, and this is what I was actually, and this is current week, right? So I was expecting that because we took this out, so Monday is potentially the high, right? So now what I'm thinking that it's potentially bearish situation because Sunday is not the high, Monday is not the low anymore, and you know, so looking at a bearish situation, not expecting Wednesday would make the low, but somehow this thing happened, and from here things for me kind of went a little bit sideways. This is a very unexpected thing for me, and there was a channel which broke out. So let me show you. That's a channel was there. Uh, I think you already see it, right? Basically a bull flag, right? So I was here not expecting um, like a breakout and then Friday kind of pumping all the way and then coming back into this. So something about this messed up. Anyway, Fridays are usually unless you see a clear Thursday high or low, Friday can get especially if Wednesday is like this, right? So anyhow, this happened, and this. Why another thing is if this was the order flow after going up, we did the mitigation of this inducement. We failed to go up in one attempt. We came to the order flow. There is no order flow, and then again we fail uh, to go up from here in one attempt. And then we came back. We came. The order flow failed. Then it is order block. This last order block is mitigated. So this is the only one, right? So first step, on yeah, yeah, because see, this is the order flow like incomplete. First step didn't complete. Ideally, yeah, ideally this is the thing, right? So I mean, if I'm doing uh, some kind of a swing on this, which is not ideal on I mean, it is ideal. Let's look at it. It's still Tuesday closed here, but basically this is what it should be, right? From a swing perspective. So it's okay. They didn't go up, came down, and then lower time frame also shifts, etc. All those are true, but this happening on a Wednesday just threw me off a little bit. I'll be honest. But actually, this is fine. This is still valid considering we have come below that 2.5 and that where it normally chops. We have come below. So yeah, this would have been good actually, but somehow not was not. Anyway, so we got a Wednesday low, but still Friday did pump, right? Which is unusual. Like I've shown you from before how many situations we've seen where the Wednesday forms a low, then you're not expecting Thursday to form high and low, and we are going outside the weekly range. See, this is our weekly range. Right? This is Sunday. This is basically our range. This is the Monday, and this whole thing was our weekly range. Right? So I was still expecting that on Friday we'll come back into the weekly, right? Didn't happen. So very unusual. And again, why this went up? It went up beyond that 0.25, right? Went up, but couldn't go. And this is happening in this area right now as we stand in this market. Is happening right now. So I hope you understand the PO3, weekly PO3, and how to utilize it. So out of I think so many weeks, there were quite a few, right? Maybe 6 weeks or 6 weeks, I guess. Um, like most of them, probably four, I can recall, had that situation where the PO3 worked perfectly. But when it was near this 0.25, whenever it was here, in fact, possibly it got fucked, right? So, but there are fewer chances of that happening. But the higher chances of that happening are when we are in these, important areas in a larger game. So anyhow, so we still are in the 4 hour, and I would say that okay, from a narrative perspective, catching that flow in the market of where things are, this would be helpful. But then going down into the 15-minute is what for an intraday trader would be right. Isn't it? So we still need to have that. I would say I would it would be better to mark the 4 hour stuff, like if this was the POI and we know it failed and the last POI is the order block, last line of defense to ensure that this purge means and with this shift that this is the internal internal shift bullish, right? So this is what it says. The only thing from an SMC perspective that will hold this thing is going to be this order block, and then after that it's going to be the wick, right, which is unmitigated. So it would be this one, right? These are the only things before it can do this low. Okay, so uh, so anyhow, well, market, and I'm just kind of going here, but this is how it will allow you to see. Now going to intraday, very important, especially in gold, right? So gold is the see US. Um, US is influencing gold in a way that when I would just say this, that if there are bad things happening, whether it's tariff, some kind of war, whatever, then US is making kind of gold pump. But the real, I think if you have to say that, okay, if Nasdaq mainly runs on US while we can trade it anywhere, or same thing with the Forex and pairs. DXY has a lot of influence on it. It is actually Stockholm, London. That is where the financial market traders are, right? And basically now with the world, and most of the gold reserves, by the way, are stored in London, right? So gold is basically, one can say, traded out of uh, London. So where will you get your best setups naturally? And also, I would say now, and I don't know if this is true in the past, that Asia also is kind of important. Okay, so London and Asia, or pre-market New York, those are the times that you will find things in gold, and I'll just give you two times, and we'll just look at that. Like, okay, what's happening at those particular two times or two sessions? Uh, all right. So this threw me off, right? That Wednesday becoming a low, but sure, okay. So it has gone to the important POI, and from a 15-minute perspective, we'll just follow the internal structure and go with it. So I think a lot of you guys might know, but what I was tracking was basically a shift right here, right? So shift, we get shift here, and then basically now we are looking at particular setups from here. We can say this was a sweep. So what I was looking at was here, right, sweep, and unfortunately there is more equal highs, not even equal. It failed to take that high, so not yet, but after. So this is where it tricked me, right? I mean, if even if it would have wicked up, this was the inducement, and then the only POI for me left over here was one can say this wick, and this is the low, right? So I probably would have gotten in a lower time frame somewhere here, or next opportunity once this is broken. Then we are looking at there is no inducement here, so a bit difficult. But this is if you're looking from a 4 hour to a 15 minute, then this is the flip entry, right? Basically, flip entry would be right here after this uh, closes. Then we are just looking at either at the candle close or some kind of a retracement, and it's going to be a direct particular buy. But let's say that is missed, then we're looking at something here. And after this happened, so this was really difficult, right? But this was the inducement, and after that, any structural shift. But coming to the time, which I wanted to tell you about. So, two times where you should focus on is 3 a.m. New York time and 7 a.m. New York time. So, we will just go to starting from here only. Let's see where 3 a.m. So, yeah, this is where 3 a.m. kind of is. And 3 a.m. Didn't provide any particular setup. So next is around 7. So around 7, 7 is right here. We come down and we get this particular push, right? So I mean, I would have traded this particular thing somewhere in this area. I would have gone for it because if Tuesday has been purged, then Wednesday is likely to be the low. We are at the POI. Everything is looking good to get some setup right here. And Wednesday typically is a distribution day, so you would be okay to kind of hold it, right? And then coming to Thursday, so we are tracking this, right? Where is so there is a sweep. So here again, maybe some kind of a short-term sell. Let's look at 3. So this is 3. We get a purge, and again you're kind of tracking, right? So we have this. So we've not taken out that particular high. Let's look at 7. So 7 is somewhere here. Okay, we have just taken this high right here, created the equal high. We got this shift. This was the sell kind of a situation, right? Over here. So 7 So you look at 3 and 7 is when you will get your setups. Well, this has been a little difficult, but let's just track the 3 and 7. So this is 3, right? So here we are still continuing bullish. We break structure here, inducement, right? This is your order block. This is the low. Low should be protected. So at 3 you get that buy. So next, let's see 7, what happens. So 7 you kind of basically take these equal highs out, right? And then whatever happens after that. Monday around 3. So 3 is here, nothing really. We get this purge, maybe uh, something over here. Then 7 is our next main time. So somewhere in this area, basically you have the next interest should be around here. Again 3. So 3, you get all this stuff, you get into this area, and then you get a setup, and then 7 again. Something happened in this, but basically a little bit of a chop only. So 3, and ideally you will take one trade a day, right? So if you get it at 3, well and good. 7, well and good, whatever. Right? If 3 doesn't offer, then 7 would offer. Again, around 3, 3 is here. Okay, whatever. 7. Fridays are tough. Okay. This again, you can look at session, true day open and stuff like that. You're above, you're below, whatever is there. You can put it that way. 3, so 3, right? Purge. You get some setup here, and 7. Okay, so 3 is where you get the setup. Again here, uh, nothing really at 3. Then around 7. Well, I mean, 7 again, you would not have got a setup, but looking at a little bit later, here is when the setup happens. This was Tuesday, 3. Okay, you get some little more Mickey Mouse. 7 here. Okay, then there's something that happened. Again, 3. So this is around 3, purge, and then you get something. So 7, nothing. So if you're getting at 3, no, then you can go till wherever your liquidity is or whatever, like higher time frame something. Again, 3, so came down right into this particular wick. There was something that happened, and then around 7, we reach here, and then you get something right here. Again, 3, you get a setup. 7 is this area. 3, right here, and 7, yeah, here. Okay. Basically, now we are in a bit of consolidation here. 3 and 7. Right. So either at 3 or 7 you will get, and then you just have to see where we are. Right. Again, 3 and 7. So 3 and 7. 3, 3 and 7. Okay. So we got basically this kind of a short setup there. 3 unclear inside this range, and around 7 you get something small, 3 and 7, 3 and 7. That is basically the best places. So 3 and 7. 3 here, 3 is somewhere here, 7 is somewhere here. Okay, nothing good. 3 is here, 7 is here, 3, 7, somewhere here, 3, and 7 is somewhere here. Right? And 3 is here, 7 is here. 3, 7. Bit of consolidation. So if Asia has moved, then you have to be careful, right? Asia is also important now because Asia is buying up a lot of gold, etc. etc. So if Asia has moved, then it's probably better to avoid or see if you have again 3 and 7, 3 and 7. Again, because Asia has moved, then you can't expect a big situation. Here 3 is here and 7 is here. So 3, 7. So if Asia is accumulated, then and then you have to see Asia liquidity if it's taken or not. Then your three and sevens will work like Asia where we are has the liquidity being taken. Then you can wait for some form of reversal after that. That's always best. Again, 3, 7, Asia moved, right? And liquidity was not taken, right? So when Asia moves, then it can be problematic. Right? Here, so around 3, around 7. But yeah, so I would say that best thing one can do is look at that 0.25 level, look at your 4 hour, uh, you know, points, and then when we are in that at those times, Asia liquidity sweeps, then it will give you the best probability of trades. Okay, and what you'll notice is that gold does, revisit or basically it accumulates at the turning points. So you don't have to homo into your entries, right? So if this ran up, it comes down. This will be in any time frame, but you can basically set your limit order at the order flow or order block uh, in that lower time frame, right? And then once it moves, then it keeps moving. That's basically how gold works. So I'll just end it here for now. And because TGIF didn't happen, I am expecting Monday will move, and then from there next week we'll see. It'll be interesting if it can leave this 0.25, and then we can, um, you know, get some kind of a clear direction on are we going to have this taken out, then comes back, we can be bullish. If it is not, then anything below this, then we are looking at you know potentially mitigating. Let's see, there is only this particular order block, right? So it's either here or here. So wherever it reaches from there, then we can probably plan a little bit better. So I'll just stop it here and then let me know if you have any questions. And yeah, so have a good weekend.